Hi everyone. Hi everyone, and thank you for joining in. Please comment where you are tuning in from today. Today we are discussing something which is very interesting and at the top of the mind of all banking, financial services, insurance, and global enterprises all over the world. Uh, we are looking at what's changing in financial crime compliance as we look towards 2026. The pressure is building on multiple fronts. Regulatory expectations are rising, real time payments volume and values have risen, more complex crime patterns have evolved. At the same time, agentic AI, is reshaping both the threat and the response. We are seeing AI being used to automate fraud, create synthetic identities, and exploit gaps faster than ever. But we're also seeing real advances on the defense side, from faster triaging to more explainable risk based controls. The question is whether existing FCC models can absorb this shift structurally, operationally, and technologically. Me and my team here will explore across three broad themes: why this shift is accelerating now, what enterprises need to prepare for, and how providers are adapting their platforms and services. But before we get into all these details, let's start with something personal. Each of us, I'm sure, had a moment, a case, a breakdown, a blind spot that shaped how we see FCC. It would have happened or to our family members, to our friends, etc. Let's get around and share one of those. Kriti, let's start with you.
Hi, Suman, and thanks for inviting me to speak up on the recent fin crime story that I have today. I think what I experienced in the past few months is very common. At least I believe half of the people I speak with have fallen prey to this scam. So it was a routine day, and I just got a call that there has been a courier that has been shipped into my name from some international location. At the same time, all my IDs are with them, and I need to go and sort it out. Otherwise, there's going to be a kind of like a formal investigation initiated against me. And the authority, the tone of voice, the sense of urgency, all these make you believe that yes, this is something very real and something very pressing and urgent, and ultimately it turns out to be an attempt to extort some money from you, right? So this is something that I fell prey to, even though I had heard about it from multiple people. But having it happen to me really caught me unaware, and in that moment it takes some time for one to react, which makes you think, even though some of these modes of fraud may not change, but still it's how they operate in real time, and how a person reacts to it also defines how the impact will be. So that's the piece that I experience. I know, not very exciting. I'm hoping Dheeraj, Rahul, and even you have something more exciting and some new ways of these stories that are coming up.
Perhaps more scary. Dheeraj,
Yeah, thanks. Thanks, Priti, for sharing this personal um, incident. So I would also like to share a personal one. So I had a bank account uh, when I was on a different job. Um, when I shifted my job, I moved to another bank account, but I did not close that, the previous one, right? And even the contact number registered to that account was resigned. It had been close to 8 to 10 months. One day I received a call from investigators, and they asked me a question which actually froze me. Right? They asked me, "Do you know your bank account has processed 50 plus transactions amounting to a large amount?" I laughed at first. Then they showed me the numbers. Massive amount had flowed through my account in just 8 months. Money coming in from 50 plus unknown sources, funds being moved out almost every day, and I had zero idea any of this was happening. I wasn't running a business at that point in time. I wasn't into trading. Um, and then I wasn't even earning enough to have such massive transactions in my account. So that's when it hit me that I wasn't a mastermind or an accomplice, but I was a mule account. So by the time you realize what has happened, the damage is done, your identity, your financial reputation, as well as your peace of mind is compromised, right? So therein I understood that there are multiple uh, uh, creative ways which the bad actors are using to launder money. And mule account is one of the ways which is on extreme rise nowadays.
Yeah.
Over to you.
Rahul.
Yeah, thanks, Dheeraj. That was very sort of scary and interesting to know both. So while everyone is sharing a personal story, the moment that stands out for me actually came from like something which I was reading one morning. Like everyone will be knowing, some of you would have been knowing that last year one of the largest crypto exchanges agreed to pay a staggering around 4.3 billion US dollars penalty to US authorities for AML and sanction failures. Now, what made it remarkable wasn't just the size of this fine, but it was like how preventable much of it was. Regulators found that weak monitoring and poor sanction screening had allowed high risk actors, even sanctioned entities, to move funds through a platform which is just up through your app, like anyone can use that, even I, you, anyone, with almost no resistance. And here is the interesting part. Regulators didn't say that the firm never had controls. They said that the controls didn't work in practice. Now, that phrase didn't work in practice is something becoming the new standard globally. So, for the listeners today, the lesson is clear. Whether you are a bank, a fintech, or a digital asset firm, innovation and speed from compliance expectations. And if anything, they just raise the bar.
Yeah, I mean, these are very, in a way, uh, if you're caught in the fraudulent activity, it's very scary. For me, it happened twice, not just once. And after being extremely careful and being an FCC expert per se, I faced this incident twice where my credit card was swiped in or used in international locations, and I have never been to those locations. And these cards were swiped for very small amounts, which might not fall under the notice if you are not very vigilant about it. They were like one Peruvian, I think, unit currency, and the scary part was that they were the fraudulent actors were like kept on swiping small amounts, and once I noticed, I immediately called up the card merchant and the provider and asked them to block it. They were, at least in my experience, they were very fast. They were able to clearly identify with the parameters available on their screen the nature of the transaction, whether my GPS location was based in India or not. And there were other factors which I think they analyzed quickly to be able to identify actually a true positive, true fraud scenario, and they were able to block the card, reverse the transactions, and even issued a new card in a matter of days. So with the advance of technology, I think this has become much more faster, much more convenient, and I think banks and fintechs are pretty modernized their flow and have been pretty actively looking at these scenarios and preparing for it. So thanks everyone for sharing those moments, which like bring out the reality behind the numbers, and they're also kind of alluding to the fact that under more strain than it appears on the surface, right? For many enterprises, it's starting to feel like operating on infrastructure that's been patched over time but wasn't designed for what it now needs to handle, right? um, can it handle faster traffic? Can it handle heavier loads? Can it handle more risky entry points? uh, and how would it change over time, especially with tech, with fraudulent actors using tech as their weapon, right? So Kriti, based on what we are seeing in the market and in our conversations with our clients, where do you think the structural pressure is showing up most clearly?
Sure, Suman, and happy to share that. I know we have a slide as well that talks about where we are
Yeah.
seeing the broader market moving towards, right? And why now, right? So this becomes a very pertinent question as we look at the end of 2025. We're looking at a new year ahead where a lot of these changes are expected to steep up even more. So the biggest thing today, I think there's this external pressure from the regulators, right? And it's something that no longer can be ignored. A lot of this shift in the mindset has also come in with the advent of how consumer behavior has changed. A lot of it is also driven by how real time payments wave has taken the market by storm, which has actually exposed the batch based processing of a lot of these payment transactions can no longer be the way forward, right? And that is where the bigger shift is coming from regulators. Hey, how can we be more effective? Regulators are increasingly asking, right, do you have systems that actually work and not just systems that are there in place? And at the same time, in all of it, we are seeing the implications percolate down to the banking and financial services enterprises themselves. Within these enterprises, the boards, the broader compliance office, the risk office are now answerable and are now accountable what they are doing to drive these measurable results. So a lot of this is a mix of what is happening in the market externally, the increasing sophistication of the crime patterns that are coming in, and the implications that go downstream onto how a bank really manages this. And I know we touched upon multiple things, and what I'm also curious to understand from you, Dheeraj, how do you see the broader technology and the operating model factors making this shift, right? And why do we see 2026 to be the year of this broader inflection point as we look at it today?
Yeah, I think it's a very valid point, right? Within operational pain points, we are seeing that they are hitting a ceiling, high false positives, case backlogs, fragmented systems, multiple tools sprawling, right? Shortages of talent. So these are causing increasing costs, right? While also the quality or precision of these R filings hasn't been up to the mark. So what is happening is across the board, the supervisors are demanding outcomes, right? They basically wants to showcase uplift in detection accuracy, reduction in losses. They want much more cleaner and efficient alerts, right? They want things to be done in faster times. And then also they would want to make sure that the real time pressure is also taken care of, right? So before we start on the next, some things will remain the same for enterprises, which basically means driving top line growth, improving bottom line impact, managing risk, as well as delivering stakeholder value, right? So clients are going to spend on process outcomes, which would be powered by AI and differentiated skills. uh, they were doing it predominantly by using some of the transformation levers like rebadging, process redesign, etc. Right? But now they need to do it by evolving and reinventing a lot of their tech systems. Right? In current scenario, if tools and technology is 8% of the overall managed services spent for the enterprises, we estimate in near future this tech spend contribution is going to change drastically, and it would reach north of 40 to 45%, right? When it comes to sourcing different vendors, it will again, we will see a shift from a competitive bidding to a collaborative solutioning. When it comes to providers, right, maintaining those traditional operating models, or still going ahead with the sustaining of existing models, will these providers would find themselves aggressively pricing their technology as well as services, and hence rapidly losing margins, and hence they would become vulnerable to market consolidations. Now, those who want to survive must balance today's pricing pressure while looking at a more forward looking model, where essentially what we will see is that the evolve scenario, or the evolutionary and reinventing models, would cannibalize the existing ones, right? In order to gain early advantage as the evolutionary model uh, or the evolving model approaches, they need to expand, right? Effectively bring a significant portion of clients along with them on this evolution journey. So ultimately, evolutionary operating models would be the ones who would be predominant, right? And then slowly we will see that the reinvention would also grow moderately, where the smaller gains would that they would be offering won't be able to offset large losses incurred during the period of transition, right? So we will see this continuum of um transition where we would see slowly the models would shift from the current traditional sustained model to evolve and then gradually to reinvent.
Just had a question on this, right? One is, yes, you have a gradual shift looking at all the risks and rewards and moving towards that reinvention. Are there firms or are there scenarios where you see firms directly moving to this reinvention scenario, right? Especially with the need of the hour to manage volumes and to compete with others in the sense of customer satisfaction otherwise. Do you see that shift happening, or is it that gradual shift?
So a very interesting way to approach that question, Suman, would be to look at what essentially the enterprises are expecting when they are heading into 2026, right? And it's a very scientific way to look at things. Now, we at Everest Group, we keep on hearing from different enterprises, right? They come to us looking for FCC partners. The conversation usually starts with very simple question, right? Who can help us keep pace with rising regulatory pressure while also modernizing our operations, right? Which essentially means as we go deeper, five clear expectations consistently emerge, right? Expectations that are now non-negotiable in FCC sourcing decisions. First is they expect partners to deliver a flawless transition as well as onboarding, especially because FCC processes touch critical customer as well as critical risk systems, right? Secondly, they do not just want their tech vendors or tech partners to simply execute the instructions given by the enterprises, right? They want them to come and proactively tell us how to get better when I modernize my systems, right? So that clear roadmap or pathway is something which needs to come from the providers themselves so that they play an important part in their evolutionary or the reinvention journey, right? Uh, Next is they want to have transparency, both in pricing as well as in terms of the compliance outcomes. They do not want to have those blind spots and they do not want to have surprises at the end of a couple of quarters, right? So giving them that transparency also becomes imperative. Uh, Post that, enterprises also expect partners to help build audit ready processes because that's something which is critical for the regulators. They want clear audit logs, they want clean lineage, and also they would want to maintain strong data security foundations, whether it is around data governance, whether it is around different control frameworks, right? And most critically, bring AI and automation into financial crime and compliance. This is the major ask today, right? Across the board, whether it's the CIO, CTOs, or even CROs, bringing in AI led transformation is the need of the hour. So, any transformation without mention of AI is something which possibly the enterprises might not even consider.
Yeah, and one thing, at least one very interesting thing that I have seen in these last 12 months, and I know Dheeraj, Rahul, Suman, you all have been part of multiple such conversations as we spoke to many of the enterprises and the broader ecosystem of technology providers and service providers. While 70% of the enterprise expectation is around embedding AI analytics and automation in the broader FCC workflows, right? What's interesting to note is the three scenarios, Dheeraj, you talked about earlier, the sustain bit, evolve bit, and the reinvent bit. This 70% of this category sits in that reinvent. But then the adoption towards that reinvent path is happening in parts. So it's not like a full-fledged transformation an enterprise will undertake overnight, because the challenge in all of it becomes, how do you have governance, how do you have explainability for the AI solutions, AI platforms you're building in. So it's kind of also contradictory, but it also, I think, brings a very interesting dynamic for us to investigate further. While enterprises increasingly have this high expectation, at the same time, the responsibility falls a lot on the broader ecosystem, how they can bring in and build this explainability and governance into the platforms today. Another thing, at least, that I also noticed this year is the other pieces that you talked about, right? So how do you provide improvements, and you are not just executing? How do you provide a very flawless kind of an experience, an end-to-end experience? That's where we are seeing some bit of a variation as well in how enterprises of different sizes and scale look at some of it. So we see a lot of propensity to invest in these AI first or AI compliance platforms from a lot of the large sized banks first. They are the ones we are seeing are moving ahead with this path. There are some of the tech providers also who are responding to this in kind. But a lot of the mid-tier or the mid-market banks, the regional banks, are still trying to balance out the human and the AI agent kind of an approach. So I think that's an interesting piece, how we are seeing the adoption and the expectation also vary by different cohorts. I don't know, Suman, if you have also seen something similar, or if you want to add anything to
Yeah.
that.
So I think I'll go back to our PTSD framework, which we talk about, right? So, in my opinion, and what I have seen talking with clients, I think this is a golden opportunity for them to eliminate that process tech skill and data debt, right? To move from that sustain to reinvention stage. This, in some stakeholder groups within enterprises, this has become a priority because you can't essentially enable models, especially very high cognitive intensive models, to especially think like fraudulent actors and connect scenarios without actually solving your data debt and connecting systems, right? So integrations and data management have been some of the key activities which are essentially at the top of the mind of enterprise stakeholder groups. And then they're trying to resolve that. And we'll see that much more because the data needs to start talking to each other, kind of at least give the explainability part of it. You need to understand the traceability of that data, whether it is accurate, complete, and whether it is consistent, right, across multiple systems, especially if you have legacy systems not integrated and talking to each other. So you have to be extra careful as an enterprise, uh, think ahead of the curve and figure out what the fraudulent actors might get in as scenarios, right? So are you talking to other enterprises? Are you ensuring controls are in place? Are you figuring out what next is coming in tech and preparing for it? But this kind of also helps us move into the next segment, right? KG, what is coming up next? What do you see as the technology shift, and how are FCC teams within enterprises and within the providers ecosystems thinking about this?
Sure, Suman, and I'll be happy to share this, right? I know at the start of this discussion, we talked about how sophisticated criminals are becoming today in executing some of these frauds, and a lot of the other different kinds of fraud mechanisms they are adopting, right? And inevitable that technology also must rise up to meet and tackle those challenges head first. Six key themes or other six technology shifts we are seeing that will come in, and a lot of enterprises are adopting them, and they are seeing They're seeing, I would say, varied adoption. While they see varied adoption, a lot of it is also to do with how the broader ecosystem is responding. At the same time, how enterprises can really incorporate some of it. So I know while some of these themes may look like too futuristic or too real to be true, that how can we implement them overnight, but the need of the hour is we need to be thinking about these controls and the agentic AI adoption and the multiple pieces around localization as well. So I'll just touch upon these. So the biggest thing today is that real time control is going to become kind of non-negotiable today, right? So instant payments, real time payments we talked about, right? And just barely milliseconds to respond. The volume is too high, so the technology really needs to keep pace. So real time controls will become non-negotiable. They already are becoming non-negotiable. But then the liability that falls on bank, the reputational risk that comes along with it, really necessitates the need to invest into these real time controls. The other big thing in the world of FCC today, no conversation is complete without agentic AI. 6 to 8 months back, we were talking about generative AI, but I think in the last few quarters, we are now, everyone is talking about agentic AI, how agents are taking over the entire FCC workflows, and how, where is the low hanging fruit, where can they really have the opportunity. So the biggest thing will be the FCC technology platforms that can really incorporate this, and enterprises who can embrace this, right? We are definitely seeing human in the loop across the workflow. So it will not be that everything will be truly agentic, but then there needs to be an aspect of agentic AI coming in if enterprises really need to be thinking about tackling fraud and ensuring compliance in real time. The third bit is mostly around the regulation and the localization, right? So as regulatory scrutiny speeds up, we are seeing different spanning out in different geographies. So a lot of the technology shift is around how the platforms, and for banks that operate in multi jurisdictions, right? How do they ensure their platforms can support the localized regulations and they can keep on mapping up dynamically at the same time, right? So one example of this is also to do with the sanction screening, the list management that happens in real time across jurisdictions, right? So that's a big challenge. We have seen that to be a very manual kind of a process flow. And banks that operate in multiple geos, the teams are sitting in different time zones. It's a very manual process, very Excel based, right? So a lot of this really needs to move with the technology shift that's coming today. And the remaining pieces, I think crypto exposure that's coming in very very heavily. A lot of it will impact your current anti money laundering workflows as well. So crypto can no longer be the fringe concern. I think it's coming into mainstream. We are seeing that rise in the holdings in terms of the crypto holdings that we are seeing. So banks really need to be prepared. How do they tackle it? The last two bits, I think, are the ones that I really resonate with the most. The one on data intelligence and the model governance, right? So data explainability, the model governance will become, are becoming enterprise mandates today. There is a lot of push on how are you making these decisions, right? So the transparency that needs to come in, the audit trails that need to come in for every model, how are you training them, how are they taking those decisions, that becomes very very crucial. And my favorite, I think, how we will have the rise of these orchestration platforms, right? So gone are the days when you can have your risk teams, your compliance teams, your fraud teams working in silos. So how do you have that orchestration across the entire enterprise that can consolidate all these workflows together, that give you a single 360-degree view of what's happening, right? So this rise of orchestration platform is going to come in and is going to drive a lot of unification, breaking down of these silos and these systems that we're working in. So I think these are the big themes that I am seeing. We are seeing the adoption of it in parts, but next year we are going to see very heavy reinforcement of that.
I think we
This
had
is,
a
yeah,
question, Rahul, right?
yeah,
Can agentic AI be used to put up warnings if a user's purchasing pattern suddenly be changed and ask someone in security or the end user? Dheeraj, you want to take this up?
yeah, sure. Thanks. So yeah, I think it's a very good question in terms of what are the use cases for agentic AI, right? And straight answer would be yes, agentic AI can definitely be used to flag sudden or unusual patterns or changes in a user's purchasing behavior. But then what we are also seeing is that there has to be an orchestration layer on top, which essentially should also have some component of human in the loop, so that the AI can quickly detect the anomalies, generate contextual warnings, as well as escalate them either and or to the end users, as well as to the security or the AML analyst in an enterprise environments.
So do you see like what portion of human in the loop if you divide it say between AI and human at this point in
As
time?
Yeah, so as I said, right, it's a continuum, right, where we would at one part of this continuum you would see um, human agents. On the other end of this continuum, you would see AI agents, right? And then based on the complexity of the scenario, uh, regulators prerogative as well, right? This uh, contribution would vary, right? There would be scenarios where essentially, say for example, the entire triaging can be done by the AI agent, right?
Mhm.
So 90% of the things can be done by the AI agent, pulling in evidences from multiple sources, bringing in screenshots from different areas, doing some sort of number crunching, etc. Right? But then, since the regulator um, mandates that the human needs to file the SAR filing, that
Mhm.
last 10% or that last mile connectivity needs to be provided by the human in the loop, right? But then there could be scenarios where most of the things might be done by the humans, right? So possibly those sort of use cases might not qualify for an agentic AI use case, and hence it is very important not only for the providers but also for the enterprises to understand what use cases needs to be prioritized for an agentic AI scenario, because uh, that would have huge implications on the return on investment. So those cost benefit analysis or those ROI analysis becomes extremely important, because it's not just about the compute cost, it's also about your implementation, your testing. You keep on upgrading the systems, you keep on upgrading the LLMs, you need to create a enterprise environment and data lakes, etc., right? So prioritizing those use cases becomes critical.
Right. In this continuum, Dheeraj, I had just one additional question on it. How important do you see the role of data per se, especially if you're able to take that quick decisioning, right? And then what are enterprises doing towards that? I think we had this place where we saw that enterprises, the more mature ones, the average handling time, turnaround time, and all these KPIs which we had benchmarked had improved over time, right? So how do you see that playing? Is it just does the data play, or what has helped them make that move?
Good question, Zuman. I think in terms of different KPIs, right, which traditionally we have been tracking for different banks, primarily say a large bank in US, right? So for them, there are particular dimensions like turnaround time, right? Um, and then there would be some quality matrices like end user experience or CSAT or NPS numbers, right? And then there would
Right.
be KPIs around um, overall overall efficiency or productivity or escalation levels, etc., right? Because that also
Right.
boils down to how complex is the process, right?
Mhm. Yeah.
Now data becomes a critical part of that, because in order to understand how much of an improvement an transformation initiative or a AI led reinvention would bring in, you first need to have a baseline, right? In order to understand that baseline, you need to have those benchmarks. Once you understand the baseline, then you need to start with your prioritization, your ROI calculations, and so on and so forth, right? So these benchmarks becomes extremely critical. And then with these large banks, security or customer data security is an important aspect. Hence, whatever data is going to the LLM model, you need to have a framework to control that, right? So you need to have data control frameworks, you need to have data governance frameworks, and you need to have those proper guardrails in place so that none of the data is being used by the LLM for its own model tuning, right? It should only be used just to make sure that it is utilizing it within the um, framework or within the enterprise database, and it's not going outside, or it's not training any other existing LLMs or OpenAI sort of, or
Yeah.
Open API sort of LLMs.
I mean, that's a good point. I think there's a question from Jiva on the chat. Is It's related to if AI is being used in the core of detection, or use of AI for effectiveness uplift. Where is it being used primarily, perhaps? And do you see that role of AI changing across the value stream?
Yeah, of course. And yeah, Kriti, feel free to
Yeah,
jump
please.
in here. But yeah, definitely, uh, role of AI, if you look at the chain of financial crime and compliance, right? You would have your onboarding or KYC sort of processes, which is very customer facing, right? And then you would have extremely enterprise focused, regulatory focused processes like AML or anti-money laundering, right? And then again, you have processes which are uh, possibly not of great importance when it comes to monetary um, losses, right? Something like a chargeback. So
Yeah.
different line of businesses or different processes would have a different sort of an effectiveness uplift, right? And hence we need to make sure that which is more critical, both in terms of customer experience, enterprise reputation, as well as monetary losses.
Right. KJ, you want to add something to this?
Yeah. I think just wanted to add to this piece around where do we see that AI truly or really being used in the core of the detection piece, right? And how much it is helping in the effectiveness uplift. So one thing that we are seeing, and I think this was part of one of the demos that I have also seen very recently. Some of the other providers are already imbibing it, but one use case was more around how do you do alert prioritization better. So how do you really do that likelihood scoring, that alert is truly kind of like a true positive versus a false positive. So it's sort of if there are multiple alerts for a human agent to look at, AI can help looking at the past behavior, past scanning, past records, to give you a view of which alerts will be the most critical to solve for, or do a multiple kind of a bucketing across those alerts. So the effectiveness or the uplift that we see immediately is the time is reduced, the true positives are detected earlier and faster, the false positives are filtered out in a better manner, right? So that's where we are seeing. So I think long answer short, where we are seeing some of these use cases is where like AI can work in the background, kind of generate a first level of a summary that the human agent can then build on top of to save time. And like Dheeraj said, you will still have humans in the loop in this entire workflow, different processes, right? So that will still remain. But then the question is how much of a summarization can AI do for you, which saves time and helps in that end time uplift. So I think that's just one piece I wanted to call out.
Yeah, I think in my like whatever demos and aspect I've seen, I think the more successful ones in getting to higher accuracy of results are providers and enterprises focusing on automation first, then AI, then agentic AI, ensuring that all the loopholes are covered and they're not rushing to implement something which they're not able to handle across all the governance, compliance, ethics. So this transition I've seen is where automation adds much more stability to the entire detection and effectiveness conversation, and then the gradual transition to AI and agentic AI. Dheeraj, over to you.
Yeah, and that brings me, because I can see that this is a very pertinent topic of extreme interest, right? And we are getting some really good questions from the folks joining us from different parts of the world. We also have an offer here where we basically um, uh, are providing a complimentary meeting to discuss um, uh, different topics within financial crime and compliance. One is, of course, the kind of research or the FCC technology research which we have planned for 2026. So we will walk you through that. And secondly, we will also be open to do a 30-minute exchange of perspectives, right? Some of the topics which we can pick up would be around reinvention in operations or rise of agentic AI, how it is changing buying behaviors, as well as we can also talk about some of the upcoming areas like digital identity and platformizations.
Thanks, Dheeraj. Eager to have those conversations with our audience. Um, Kriti, I think we touched upon the shifts, the technology shifts that FCC teams are planning for, right? And we also touched upon the operating models and such. What do you think will differentiate partners versus reinvention partners, right? Um,
Yeah.
which providers will cut it and become strategic for enterprise? No questions asked.
Yeah, yeah, and that's a great question, Suman, because that's a big question that we keep on hearing from the enterprises as well. But then, what will really separate true partners from a lot of the multiple noise that is existing in the market today? So many technology providers, so many platforms, right? Who will be the ones who will be more pertinent? I think three things will differentiate the providers today, right? So number one is going to be trust. The second is going to be explainability, and finally, the ones who can integrate at scale. And let me touch upon, right, multiple of these pointers that we have on the slide. So mainly from a differentiation perspective, so providers who can clearly cover the now is basically the skills that are really needed today, the technology feature functionalities that are needed today. At the same time, they are providing that roadmap, they are providing those capabilities for the new areas and the next that we can see in the future. So a lot of the crypto scoring, a lot of the agentic AI stacks that they are building. The second one is very I would say very close to what we are doing at Everest Group as part of our annual research, the capabilities that must be production ready. So many of you who follow our research would know that we come up with our innovation watch on generative AI and FCC technologies. So we had come out with an iteration of that in the earlier part of this year. We are coming up with a refresh of that next year. We have titled it Agentic AI and FCC. A lot of the discussions have already begun. I think we are halfway through with the responses we are seeing from the providers. The biggest piece to come out of our analysis from what we heard from providers this year versus last year is almost 50% of the use cases that were in pilot have now moved to production, right? So that's the big leap we are seeing. Enterprises are demanding the same, right? So are your capabilities production ready? How can you do it at scale, right? And we are seeing the provider ecosystem responding in kind. The last piece I want to cover on this slide is how can providers think about orchestrating the entire ecosystem for an enterprise, right? So ultimately, for a banking or a financial services enterprise, the question is not which platform is the best, but which platform can actually orchestrate and integrate and sit and work with the hyperscaler, with can work with the underlying core platform, with the broader CRM and the data platforms together, and bring it all together for the enterprise at the end of the day. So I think all these things will really help the true providers become the true partners for enterprises. I think, Suman, that's what I wanted to cover because these are the pertinent things I am seeing in my conversations.
All right. Um, Rahul, anything you want to add, or you want to perhaps talk about our research roadmap?
Sure. Thanks for giving this, Suman. So now, like we have an action-packed research coming up, interesting research coming up next year, and let me take a moment to walk everyone through what Everest Group is bringing to the market in 2026 across our financial crime and compliance technology space. and this is going to be some of the most comprehensive and insight-rich research coming next year. So, as throughout the current session, we have seen that how we see that the industry is clearly at an inflection point. We talked about real-time payments, which are reshaping risk. Regulators are shifting from rule adherence to proof of effectiveness, and enterprises are demanding the speed, precision, and explainability from the FCC stack. So, to help basically the ecosystem and navigate this shift, we have built a research agenda that spans across fraud, AML, KYC, digital identity, and emerging technologies like agentic AI, and covering even the crypto risk space. So the first major report, which would be coming up early next year, which is January, would be our top 50 financial crime and compliance tech providers. This will be a curated listing of the 50 FCC tech providers globally. This would be a repeat iteration. We did the first report this year. We will be assessing providers here or listing them out basis on the parameters such as scale, the breadth of capability, market presence. Uh, then we'll be following this up with our innovation watch. I think Kriti, you talked about this in our a few moments ago. So this will be a dedicated research format that spotlights cutting edge advancements in the FCC tech space. Innovation Watch looks ahead at the breakthrough features, experimental models which are in pilot production, and which are those early stage differentiation where the market is headed. The last iteration was focused on generative AI applications in FCC, and this year we are extending that lens to agentic AI, which is already beginning to influence the autonomous investigations, intelligent workflow routing to give few of the use cases which we are actively seeing. And this study compares the most forward-leaning vendors here, like who is actually moving that buzz to validated capability.
Yeah.
Then we'll be coming up with our series of product level peak matrix assessments, which are flagship average group assessments. So these are structured frameworks that evaluate providers along two dimensions, which is market impact and vision and capability. And together, these dimensions help the stakeholder understand not just who the major providers are, but also how mature and future ready their offerings are. So the two peak matrix assessments which you will be doing next year are the fraud management products, which covers payment fraud, scams, mule detections, identity centric fraud, like few of the instances which we heard even from our own personal experiences. And then comes up our AML product peak metrics assessment, which evaluates transaction monitoring, ongoing surveillance, entity resolution, and model governance to name. And then finally, we are coming up with our top 50. This is an inaugural report within the KYC technology provider space, which spans digital identity, CDD, EDD, perpetual KYC, onboarding orchestration, etc. So, in a nutshell, across these five reports, our aim is simple to help banks, other enterprises, say fintechs, digital asset firms, and tech providers understand where the market is heading and what good looks like in a world where real-time controls, explainability, uh, integrated orchestrations are becoming non-negotiable. I'll just take a quick note to help providers who want to participate. So our participation process is designed to be structured. So where once we have the RFI already rolled out, uh, you can submit your inputs there to 90-minute briefing. Uh, and yeah, we will be reaching out again to you for those fact checks and sharing a pre-release. So these publications also come at a point when enterprising are rewriting their expectations from the partner world which we are seeing. So we are excited
I
to
think
partner with the market on this journey. Yeah.
I think this is quite comprehensive research roadmap, in my opinion. But Rahul, you have been covering FCC tech extensively in 25, right? And like, what struck you in this year, and with all of the conversations you have with enterprises and FCC tech players, what kind of surprised you or you found most exciting about?
So this year what we saw was that uh, across the markets, they are most of the HCC stacks which we see, large institutions, they were sort of never designed to handle that kind of speed and complexity and the volume of financial crime activity which we are seeing today, uh, and how enterprise expectations have matured in the last 18 months. So they are no longer satisfied with partners who meet only SLAs or those process volumes. They are looking for partners who sort of meaningfully move with them on the needle of effectiveness, efficiency, and customer experience, and how their next expect the broader market from the broader provider landscape. So they don't just want passive vendors who only execute the workflow, but they
Mm.
are actively looking at sort of helping them redefine or refine the logics, model improvements. So they just don't want providers who run the process or run their processes. They want providers who help evolve it.
A lot of India-based providers, right? In your experience, challenging the global stalwarts. What do you think about it?
So we are seeing a lot of sort of a breed of tech providers who are very niche, focusing on one of the parts of the value chain, giving the innovation scale they have, say, in parts of uh, trade-based money laundering or the watch list management, screening management. So there are a lot of these niche specialists coming up, which have made their way onto the global market and sort of giving the competition to the top providers or the legacy providers which we have seen in the markets. And even enterprises across want to partner, they want to experiment. It's not that they only want to go with a big to solve or that challenge or value statement, whether it is coming from a niche, say an India based or say a UAE based firm. So they are looking and they are open to collaboration.
Thanks, on. Neeraj, Kriti, you want to answer some of the questions before we move to the closing?
Yeah, I think one of the question is around 50% to production seems exceptionally high. Is that agentic and AI pilot to production concession and FCC? So I think the research that I was referring to, our earlier iteration was around generative AI and FCC. While this year we are doing agentic AI and FCC, we are seeing all those generative AI use cases that were marked under pilot in the previous iteration of our research. We see them move to the production bit. A lot of the agentic AI use cases, I would say many of them are still in pilot. Some of them do remain in production, but the heavier push on the production side is where generative AI as a technology has matured. That has moved ahead. I hope that gives some clarification. I'm also seeing another question come in around EAs are seeing a risk now in moving with hyperscalers for AI adoption, like primary cloud provider adoption, as it is pushing more towards vendor lock-in and an oligopoly. So I think let me start, and maybe Dheeraj or Suman, Rahul, feel free to add to it. So definitely, I think this is one interesting trend we are also seeing, and then this trend is becoming more prominent when a lot of the technology and the in-house teams are directly building or enabling these use cases as part of the broader cloud infrastructure. So this is where
Right.
robust governance controls need to come in. So how do you take a view that is per use case and not try to just do within your estate? So I think just to also give an example, so say if you're looking at a particular use case within your compliance workflows, and you have used some of the AI enablement tools from say another and hyperscaler is providing you, you need to have a bit of a governance mechanism within your bank that tracks what you are doing across use cases, not just within your tech estates. Because if you do it within your in-house estates, you may let slip what is happening or what is being built onto that particular infrastructure. I think that is the big thing we are seeing. The other is the broader, I think, the architecture bit of it, right? So how do you have an architecture that is portable? How can you have like these use cases that can be very portable and moved around? I think those are some of the areas. But yes, the concentration risk comes in, but then it can be solved by how you sort of look at the data layer within that hyperscaler. How do you separate that out? I think that's my initial sense. I don't know, Dheeraj, Suman, Rahul, if there's anything to add to it.
No, I agree to that. And then another way to think about it is, right, that any change or any transformation would have its challenges. If we go like 10, 15 years back when the World Wide Web boom started, right? At that point in time, brick and mortar shops were very um, uh, worried about should we take our shops online, right? Digital adoption was pretty low because they did not wanted to give control to technology which they are not aware of, right? But then slowly there were guardrails put in, there were data security layers, the entire architecture became so common that in today's time creating a website is like within a matter of weeks you can like create it, have test it out, do multiple regression testings, and then launch a new website within a week itself, right? Similarly, as we see AI adoption getting at a more stable state, we will see these risks getting um taken care of, right? So enterprises will become more and more um, open to these changes, and hyperscalers will definitely play a huge part in it because they would be solving a lot of problems which possibly some of the enterprises won't, whether it is around overall infrastructure, data privacy, business continuity, resilience, or even LLM tuning and coming up with newer updates, right, on a regular basis.
Yeah.
So that's how I look at it.
Thanks, Tejas. That was quite interesting. We are nearly the close of the hour. Thanks everyone for listening in. But before we close, Kriti, Dheeraj, Rahul, one key message each for our audience, for enterprises or providers. What do you want them to take away? Kriti?
Okay, so let me start. I think the key takeaway today, at least for the enterprise audience, is how do you unify a lot of these fragmented workflows that exist today. So and how do you then link compliance to the business outcomes, right? I think that would be the key message that I have for enterprises today. Dheeraj?
Outcome orientedness. Yeah.
Yes, yes.
I think Kriti has covered a vast breadth of
Yes.
the
The full
issues,
spectrum
right?
of it. Yeah.
Yeah. One message or one key takeaway from this particular session, which I would want the FCC practitioners to take away, is that it's an evolving space, it's a complex space, it will keep on evolving, it will become much more complex, right? So let's try to find out areas, let's try to find out hotspots where you are able to match the psyche of the regulators, and then you're able to co-create and reinvent your overall services together.
Psyche of the fraudulent actors as well. Dheeraj, I think you missed
Yes,
that
exactly.
key point. Rahul, to you.
So my key takeaway for, I mean, the entire ecosystem would be to think about like who are your key partners in this journey, whether it's hyperscalers or accelerators. So design your FCC workflows to be portable
Yeah.
so that you never have to sort of sacrifice your control over convenience, and how you can sort of build the best out of the available. So you don't need to own everything. You have the right partners there in the market. So how do you bring all together and make it live? That would be a key
Yeah.
takeaway.
That's great, Rahul. It was a great session talking to all of you. And getting back to BFSI and having these moments with you is great. The FCC model is definitely shifting. 2026 is when it really gets real with all the agentic AI and AI stuff coming to production much more faster. what you build and who you build with will define your outcomes and will decide whether you're here for long. So thanks everyone for joining. Hope we added value to you.
Yeah, thank
Thanks,
you,
everyone.
everyone. Wishing everyone a great year ahead.
You.